Good morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. It's the 9th of June, 2026. I'm Mark Gardner. Now, this is a bit of a different episode. We've obviously had the long weekend here, particularly New South Wales and a few states in Australia. So basically, I'm just going to summarise Friday night and last night's movements and yesterday in Asia. So we had Freakout Friday. The Nasdaq basically had its worst day since last April, which was the Liberation Day falls. And we just rebounded slightly overnight, but the Nasdaq was down nearly 5% at one stage, or around about 5%, and ended up down around 4%. But this is the heat map from overnight. You can see where we've rebounded here in NVIDIA, basically on the left-hand side here. NVIDIA, Broadcom, Micron. I think Micron was down about 14% on Friday night. It's rebounded about 10%. But it was the worst night in the SOX, the Philadelphia Semiconductors Index, as well, in a very long time. Tesla rebounded. Some of these in the middle here, the producer manufacturing, they're the two darker green ones there, Lam Research, and they're involved in the semiconductor or chip fabrication sort of thematic. So and Tesla's really been painted with that brush of late, but I mean it's all happening in that sector to the left hand side there, where we've had really strong gains over the course of the last 12 months. So we're back to neutral now in the Nasdaq, a sell in the S&P on the daily, a buy in the Dow, but really strong sells across the board in terms of in terms of those hourlies now. Despite the fact that we did have a small rebound overnight. Now, we did have the Kospi down and actually shut yesterday, down 9%. It opened down 8%, which is limit down. And then it rebounded slightly, but pretty much they had to close down the market for the day. Super volatile market, though, the Kospi. Everyone loves the headline there, particularly the media. But generally, it's not uncommon for it to have limit down, limit up days. And if we've had a slight bounce overnight, you would expect that thing to probably bounce pretty significantly today, and have some, trigger some more headlines again. Basically, Japan was down like 4%, China down 3%, South Korea down 9%. But yeah, the overall, we had a little bit of corporate news. Intel was up 11% as Google were considering using them as the backup and ordering 3 million TPUs or custom AI chips for 2028. Marvell was up 9.6%. It'll be joining the S&P on June the 22nd on the rebalance. Apple was down, and as you can sort of see here, Apple was one of the only ones in that sector on the left-hand side, was down on a very lukewarm sort of pre-release of their beta version of Siri, which they've actually got Google to build for them. So look, I mean, they really are. They've got that incumbent coverage and very sticky customers, and it's sort of enabled them to not make all the spending that all the other sort of hyperscalers are, and they're sort of leaning on other people's technology. I do tend to agree with them, though. I don't think they've got the setup to go after the likes of Google, etc. So probably in the long run is the better move. To partner up with what will likely end up being one of the better AI companies out there. I think Google is probably in, our number one or number two, holding. I mean, they've got exposure to everything. They're SpaceX. They're doing all their own chips, so they're not as tied to, not as tied to GPUs. They had a really slow start to AI, and they've been a little bit dismissed and ignored. But they're also very deep into quantum, probably one of the best quantum companies in the world. So, they've got a lot of irons and a lot of fires overall, and they probably should be pretty resilient. But and then Meta as well was considering a stock offering after Alphabet's $85 billion equity equity sale. And OpenAI confidentially filed for IPO Monday, targeting up to a $1 trillion valuation. So SpaceX IPO is apparently Friday, 75 bill raise, 1.75 trillion valuation, well oversubscribed despite a 6.4 billion operating loss and only around about $15.5 billion in revenue. So, we're you can have a sort of bit of a look here in terms of the space sector multiples. Rocket Lab, Planet Labs, 50. Well, Planet Labs, which does all the satellites and does all your basically provides all the Google Maps and things like that. They're 50.5 price to sales ratio. Rocket Labs super high as well at 115, and then SpaceX. Well, it says 94, but I've heard numbers of up to 105, 110, but as you can see back here, Amazon, Meta, Microsoft, Tesla, even Tesla, like around the 16.6 price to sales. This entire sector is built on future technologies that are nowhere near where they say and they state in the SpaceX IPO. So it'll be really interesting to see what happens there. There's going to be a lot of movement. I think S&P knocked back SpaceX's request to be just immediately included into the S&P 500. They're going to have to wait like everyone else. It sort of shows the power of the gatekeepers there. But and there's been a lot of negative press, I think, over the weekend that I personally sort of read on many wires that sort of saying, well, this is just typical of Wall Street selling into, the very much known passive flows that come from all these pension funds, etc., and these index funds now. And the fund managers are sitting at all-time highs in terms of, how much of their funds are allocated to passive index, which we did cover on an episode of Bulls versus Bears. This was last week's Bulls versus Bears. Kai, myself, and Jonathan Takadina do a weekly podcast called Bulls versus Bears. This week we covered the ascension, so the reverse of the SaaS apocalypse in the software stocks. We are doing a webinar on this today, live at midday with live Q&A, etc., which is an update from our webinar back in March, where we sort of did call a low and done very well out of quite a few, and it's a bit of an update on that webinar, not just sort of leaving it out there. We'll probably have a third and fourth over the course of time because it is a very fluid situation in terms of what the technology is moving so fast, and we can't just sort of leave that research out there. But as you can see, the chip stocks, this is from basically around about last June. They're absolutely rocketed. We're talking up, even with that pullback on Friday night, and we've obviously bounced a little bit, probably back up to 150 since. But around about April, we were looking at this SOX index being around about up 42%, and stocks being maybe up around about the 8 to 10 mark in terms of the S&P 500. We're now up nearly 20. We're now up just above 20 in this 1 year period. But as you can see, this rally in the SOX index is now up 140, 150%. So we're talking 120 odd % outperformance or thereabouts. It's quite extraordinary. Or at absolute minimum, it's just in the last few months alone, it's at least 80. So very, very hot sector. The companies are doing very well though. So you don't need to. We've recently taken profit in the likes of Micron, etc. But and you have to subscribe to our recommendations on Mosaic. But we were on the likes of Astera Labs, Lam. We were on Micron and things like that as well. And we've recently taken a fair bit of profit towards the middle to the latter part of last week, and did not really expect the market to be down 5% on Friday night, but it did seem a fair bit frothy, and particularly on the technicals, we had RSIs in the 90s on a lot of stocks that were just just on an absolute tear. But you've just got to, you've got to use those technicals these days, because otherwise otherwise if you're leaning on fundamentals, you would have sold probably, a good 30 to 40% lower. So overall, we've had a pretty horrible week in terms of lithium and uranium. Or 5-day period at least, and that it's a little bit weird because we've had a fair bit of noise about small modular reactors and renewables, etc. But but obviously with rate expectations due to the payrolls numbers on Friday night being double what they thought they would be at 175,000, expected at 82, we are pricing in genuine rate hikes by the end of the year now in the US. Which puts poor old Kevin Walsh in a pretty awkward position because, despite the dog and pony show where him and Trump said that he wasn't going in there to be ordered to cut rates, they still have that thing called the national debt that they need to refinance a hell of a lot of, and I would say they're not going to want to do it up here. So we did have a massive escalation in. I think the most amount of attacks from both Israel and Iran since the April ceasefire over the course of the weekend. Trump came out obviously overnight, as he does, to make sure that the stock market was going to head back up, and essentially said, everyone has to stop it. And as the American market does, they just believed him. If it was that easy, I'm sure we would have had peace in the Middle East a long time ago. But oil at that stage was up around about 5 or 6%, verging on the $100 mark again in WTI at 98. But it paired those gains, mid-session, as everyone in the US in that US session loves to believe Trump's got it under control, and back down we headed. So only up 0.83 for the day, but we are still sort of in that 90s range, and I dare say that, uranium, lithium, platinum and silver particularly, and gold to a certain extent has been treated as a bit of a risk on asset of late. So you would expect them to, if this is a genuine rally, and it's not just, momentum systems just buying the dip in these chip stocks, and then we've probably got they're probably not going to rebound anytime soon, but if it's a genuine rally, we will probably see them head back a little bit higher. So it's a bit of an odd thing for them to sort of do that. Even copper, copper seems to have the best price action out of a lot of them, but overall, this bar chart really does reflect a bit of a risk-off mentality. So if you want to have a look at our latest updated AI disruption threat map to software stocks, just scan that QR code there. I can't show you a live example, but basically as you hover over these squares, they're individual companies. I think there's about 40 odd there. It gives you the detail on, when they might start to be threatened, if they're going to be threatened, if they might be a beneficiary, etc. With the likes of the cybersecurity was one of the, was one of the sectors that we identified as definitely being, a positive and probably a beneficiary. And we were right about that. And we saw sort of CrowdStrike and Palo Alto, in particular, our top two picks, rally around about 80 or 90% over the course of those preceding 3 months since the last webinar. And broadly, from the green to the blue to the yellow to the red sectors, obviously, I'm sure you get what the color coding means. How we've grouped them based on our 5 pillars has actually been pretty bang on over the course of this last 3 months. Cybersecurity really did have a catalyst, and with Mythos being a bit of a threat, so that one shot up first. But I think what you'll start to see is increasing catalysts, sort of disproving that just because you can write software doesn't mean you've got a business plan, funding, management, etc. So scan that, go there. You can sign up for the webinar on that page as well. Like I said, it'll be at 12 today Sydney time, which is roughly about 3 hours time, and it'll be available on demand from about, an hour afterwards as well. So global calendar this week, we had a couple of small numbers yesterday. The big dog will be CPI on the Wednesday night. So we'll have, we'll be looking out for that. We've got Oracle and Adobe, which do sort of fall into that Adobe particularly, but Oracle to a certain extent falls into that software category as well, as part of their business. So there's some earnings reports later on in the week, and then not much leading into the end of the week. So live today, as I said, midday Sydney time, and on demand after that. Scan the code, and then you can sign up, or you can go to or you can find it on our website, or it's all over our socials, etc. But in terms of the ASX today, look, I worked out a rough 2-session move. We're looking at we're probably looking at around about down 100 odd points, which is down 1 to 1.2% or thereabouts. Not much in the way of corporate news this morning. But it'll be a relatively downward start to the day, I would imagine, and because we don't obviously, the only things that really bounced last night with those chip sectors, so we're going to have a little bit of weakness across the board overall. But D-cells a favour. If you want to, please help us out. If you listen to this on a daily basis, or you like, these morning updates, you can subscribe at YouTube, Spotify, or Apple Podcasts. It'll just notify you when the recording's done every morning, so you don't have to worry about catching the live one. And it's at NPC Markets on all of those platforms. So please help us out, like, subscribe, and and that'll help us be able to get a little bit more of a following. But thanks for listening this morning, guys, and we will speak again tomorrow.